How does RBI control inflation? What's the difference between CRR and SLR? And why does fiscal discipline matter? Let's decode Chapter 17, Monetary and Fiscal Policy, in a simple, exam-ready format. Section 1. What is monetary policy? Monetary policy refers to the process by which the Reserve Bank of India controls the supply of money, availability of money, and the cost of money, which is the interest rate. This is done to ensure economic growth and financial stability. RBI issues monetary policy statements bi-monthly. Monetary policy can be of two types. A. Expansionary monetary policy. Increases money supply. Reduces interest rates. Used during recession to combat unemployment. B. Contractionary monetary policy. Reduces money supply. Increases interest rates. Used to control inflation. Section 2. Tools of monetary policy. These are the instruments RBI uses to regulate credit. Bank rate, long-term rate at which RBI lends to commercial banks. No collateral required. Changes automatically with MSF rate. Marginal standing facility, MSF. Banks borrow overnight by dipping into SLR. Borrowing limit equals 2% of NDTL. Used in emergencies when liquidity dries up. Cash reserve ratio, CRR. Portion of NDTL banks must keep with RBI in cash. Used to directly control loaning ability of banks. Increase CRR less liquidity controls inflation. Statutory liquidity ratio, SLR. Portion of deposits to be kept in, or cash or gold or government securities. Ensures bank solvency, CRR vs SLR. CRR maintained with RBI, SLR maintained by banks. CRR earns no interest. SLR investments earn interest. Section 3. New Age RBI Tool Standing Deposit Facility, SDF. RBI absorbs extra liquidity without collateral. Lower band of LAF corridor. Repo rate at which RBI lends short-term liquidity to banks. Increase repo equals costlier loans equals controls inflation. Reverse repo rate at which banks park money with RBI. Increase reverse repo equals banks deposit more liquidity reduces. Char. Variable rate reverse repo, VRRR. RBI absorbs excess liquidity through auctions at market determined rates. 5. Open market operations, OMO. RBI buys, sells government securities. Buying injects money. Selling absorbs money. Chair. Market Stabilization Scheme, MSS, used to absorb long-term excess liquidity, especially during situations like FIIS inflow or demonetization. 7. Tri-party repo, TREPS, repo with a third-party intermediary like CCIL. Section 4. RBI response to major crises. 1. Global financial crisis 2008. RBI cut repo rate by 425 bits per second. Reduced CRR by 400 bits per second. Injected liquidity of 5.6 trillion rupees. Maintained financial stability without diluting standards. Though COVID-19 pandemic measures RBI introduced. TLTRO, LTRO, SLTRO. Reduced CRR. Increased MSF limit. Moratorium on loans. JAIIB, VRRR operations. Liquidity windows for healthcare. Relaxation of regulatory norms. Ways or means advances for states. Section 5. Fiscal policy. Fiscal policy refers to government measures relating to taxation, public expenditure. It influences employment, income, demand, and overall economic growth. Objectives. Promote economic growth. Maintain price stability. Reduce inequality. Mobilize resources. Improve allocative efficiency. Encourage private investment. Section 6. FRBM Act, 2003 enacted to ensure fiscal discipline. Reduction of deficit. Transparency in fiscal operations. Responsible budgeting. Key features: government must publish 3 policy statements every year. Target. Reduce fiscal deficit to 3%. Eliminate revenue deficit. Government barred from borrowing from RBI, except temporary ways or means. Corrective actions required if targets are missed. Amendments. Introduction of MTEF. Concept of effective revenue deficit. N.K. Singh Committee recommendations. Debt to GDP target, 60%, 40% center, 20% states, escape clause used during COVID-19 to increase fiscal deficit to 3.8%. Conclusion: monetary and fiscal policies work together to maintain economic stability, balanced growth, controlled inflation. This chapter is extremely important for JAIIB as it explains how RBI governs the financial system and how the government manages the economy. BS MCQs with answers. Exam ready. Question number 1. Which institution formulates monetary policy in India? A. SEBI. B. NABARD. C. RBI. D. SBI. Answer: C. RBI. Question number 2. Expansionary monetary policy aims to A. Increase interest rates. B. Decrease money supply. C. Reduce unemployment. D. Reduce government spending. Answer: C. Reduce unemployment. Question number 3. Bank rate is used for A. Long-term lending. B. Overnight lending. C. Priority lending. D. MSME lending. Answer: A. Long-term lending. Question number 4. MSF allows banks to borrow by dipping into A. CRR. B. SLR. C. Repo. D. OMO. Answer: B. SLR. Question number 5. CRR must be maintained in A. Gold. B. Government securities. C. Cash with RBI. D. Bonds. Answer: C. Cash with RBI. Question number 6. SLR is maintained by A. RBI. B. Banks themselves. C. Finance Ministry. D. SEBI. Answer: B. Banks themselves. Question number 7. SDF allows RBI to A. Lend without collateral. B. Absorb liquidity without collateral. C. Reduce repo rate. D. Increase MSF. Answer: B. Absorb liquidity without collateral. Question number 8. Reverse repo rate is A. Rate at which RBI lends to banks. B. Rate at which banks borrow overnight. C. Rate at which banks park funds with RBI. D. MSF rate. Answer: C. Rate at which banks park funds with RBI. Question number 9. VRRR is used to A. Inject liquidity. B. Absorb excess liquidity. C. Reduce SLR. D. Reduce public expenditure. Answer: B. Absorb excess liquidity. Question number 10. OMO is A. Buying, selling of foreign reserves. B. Buying, selling of government securities. C. Buying, selling of MSF. D. Buying, selling of gold. Answer: B. Buying, selling of government securities. Question number 11. MSS was introduced in A. 2004. B. 2009. C. 2016. D. 1991. Answer: A. 2004. Question number 12. TREPS involves A. Two parties. B. RBI as intermediary. C. A third-party agent. D. Foreign institutions. Answer: C. A third-party agent. Question number 13. Fiscal policy deals with A. Money supply. B. Taxation and expenditure. C. Repo operations. D. Treasury yields. Answer: B. Taxation and expenditure. Question number 14. FRBM Act was passed in A. 1999. B. 2003. C. 2005. D. 2010. Answer: B. 2003. Question number 15. Main goal of FRBM Act is A. Increase liquidity. B. Reduce fiscal deficit. C. Increase foreign trade. D. Support agriculture. Answer: B. Reduce fiscal deficit. Question number 16. Which committee reviewed FRBM Act? A. Rangarajan. B. N.K. Singh. C. Narasimham. D. Kelkar. Answer: B. N.K. Singh. Question number 17. COVID-19 measures included A. Increasing CRR. B. Reducing MSF. C. TLTRO. D. Increasing repo rate. Answer: C. TLTRO. Question number 18. Effective revenue deficit equals revenue deficit minus a. Grants for capital creation. B. Interest payments. C. Fiscal deficit. D. Capital receipts. Answer A. Grants for capital creation. Question number 19. Target fiscal deficit under FRBM is a. 2%. B. 3%. C. 4%. D. 5%. Answer B. 3%. Question number 20. Monetary Policy Committee consists of a. 4 members. B. 6 members. C. 7 members. D. 10 members. Answer B. 6 members.